1999 saw free markets dominating not only the Pittsburgh skyline, but also the marketplace. Adding customers almost daily and expanding their increasingly global business, free markets gained momentum that propelled them into all four corners of the globe. But a different destination now beckoned: Wall Street.
We could have gone public in the spring of 1999. However, we were growing so fast and we had very little cash. I mean, we had a couple $1 million, but it was still thin to take on all the expense of being public, so we had to do a mezzanine, and we decided to do it with Goldman Sachs. And we decided we also needed, not only do we need more money, we needed more staff. You know, we didn't have a CFO, was one key issue. And we didn't have, you know, you look at the two of the most important leaders from 1999 on, were Dave McCormick, who of course eventually succeeded me as CEO, and Joan Hooper, who was our CFO for 4 years, from September 99 through about September of 2003. Both of those, if we had gone public early in the year, we would have gone public much thinner in terms of management team without those two people.
Glenn was so passionate and so energetic, so seductive in terms of the vision that he was painting for the future, and really seemed to have a sense of how to make what was a great idea a tremendously successful business. And every person I met made it feel even more appealing, because there was such a collection of terrific, talented, committed individuals. So I think it was that combination of the idea, the power of the idea, the track record of seeing just in that short time from 97 to 99 this enormous momentum and success, having seen the real value being brought to customers, and then having this terrific experience with every person I met, which ultimately made me jump.
We pitched to the traders, basically the trading floor at Morgan Stanley, and just froze the place. Everybody was just transfixed with our presentation. The whole trading, even the people weren't in the room. The room was packed with, like, 50 people at lunchtime, but even the people who were watching on the TV monitors and the trading floor, the whole place was quiet watching our deal.
So Glenn's up at the front of the room, and during the roadshow pitch, we replayed the circuit boards auction that had saved United Technologies $10 million on $25 million. So Glenn's part of the pitch, he's going to go through this thing. He says, we're going to actually go and see what happened that day when the market opened. And apparently, we couldn't see it, but there was a stampede across the trading floor, because these people were listening to this on Squawk, and now there's going to be this demonstration that they needed to see. So they crammed into this room, just pushed their way into the room, and they all saw this thing, and it's this really mind-blowing, great demonstration. And at the end of this meeting, one crusty old trader who was sitting down in the front's like, yeah, I've been to all these presentations, and I got to tell you, this is the best roadshow presentation I've ever seen.
For 2 weeks, as soon as Thanksgiving was over, we hit the road. We started in San Diego and worked our way east, and we, had 10, 12 meetings a day. Met with all the major mutual, Strong, Janus, Fidelity, you name it, we met with them. We sold to everybody, and during the course of that roadshow, two things were going on. One was that the first week went incredibly well, so that we were flying around on a private jet that Goldman Sachs had chartered, and we're on the speakerphone with Goldman and Morgan, and they basically tell us that they'd never seen such demand for an IPO, and that we're going to have to raise the range. We'd filed the S1 document with a range of $14 to $16 a share, and then we raised it that Sunday night, and we kept raising it all week because there was such demand for the IPO. By this time, I'm feeling so lousy because, of course, it's wintertime. It's cold, it's crummy, and I've been flying around the country, talking like this, like I have been for this video, talking on and on and on, all day long, 10, 12 meetings a day, shaking every hand in the country, and it's wintertime. So what does that mean? It means you get the flu.
Welcome, Free Markets, Lawrence Calcano from Goldman Sachs. You know these folks, you're heroes. Unfortunately, Glenn cannot be with us
so
today.
We go down to the Goldman Sachs trading floor, and Goldman, through all this, Goldman's going to open the stock, and we didn't even really know what it meant to open the stock. And the traders get on the phone and they call the accounts, and they say, all right, we're at $100 on free markets. What do you do? And the accounts were saying, we want more. We want to buy at 100. So the head equities trader is standing there on the Goldman Sachs trading floor, and he's barking, over the PA, "We're at 150 on free markets." And boom, they start working the phones, and they're calling the accounts. They say, "We're at 150 on free markets. What do you do? What do you want?" "We want to buy more. We want to buy more." And so it keeps going like this. We're at 200. We're at 225 on free markets.
I get this phone call. It's Diane. "Glenn, you sure you can't get here? It's really exciting. You sure can't get here?" "No, Diane, I'm so sick. I'll call you later." Click. 20 minutes later, it's Sam. "Glenn, you got to get here. You got to come. It's incredible." And Sam goes into all this incredible detail. The book is oversubscribed by this amount. They can't open the market. It's still, the price is still going up. We don't even know we're going to open it. You got to come see this. I'm like, Sam, I'm so sick. Just leave me alone. So nobody called after that, and I stayed in bed till about 1:30. And by this time, somewhere in there, the company went public, and we opened up at $250 a share. So the price that the people got who invested at the IPO price, basically the night before commitments, were 48. The first trade was at 250, so the first sale was at 250. And the market closed that day at 280. The price of the stock closed at $280 a share.
The big day when I really realized, hey, we're public, we're a big deal in the rest of the market, was actually the day of the IPO and the party that followed it. I mean, this was a big party that night, and that was when it really dawned on me. Leading up to it, honestly, we were just working furiously, and we were doing our thing, and we knew it was working, and we knew it was successful, but I wasn't thinking about, oh, what does this mean in terms of IPO and the stock market, and that wasn't really on my mind, to be honest, and I'm not sure anyone else was either. We were very focused on the business, and that was sort of part of what was driving it forward.
Up about 231 points. That's the point gain. It came public at $48 a share. You can see the last trade was about $279 a share.
I never thought in a million years that our market cap would be larger than H.J. Heinz here in Pittsburgh, right? So here, our market cap ballooned to this close to $13 billion number. In my wildest dreams, I had no clue that something like that would happen. It would put pressure on you. You better perform.
What does the market believe in? How big is this business-to-business online auction venture that you're headed into?
Well, even in the earlier segment, people are talking about, how can we have so much growth in the economy and no inflation? Well, when you hear about our business, we're transforming the way industrial markets work. We're helping buyers save money on the equipment, the direct material, the stuff like this piston that goes into a large air conditioning unit, or this printed circuit board that goes into an elevator. We're helping buyers save money on these direct materials that go into industrial parts. This is a $5 trillion market for all of the customized direct materials and components that go into refrigerators and televisions and cars. And we're helping buyers get more efficient, create more efficient markets back into the supply chain. So we're holding prices down, we're holding wholesale prices down, and we're helping buyers save a lot of money. That's a transformational idea.
Glenn Meekum, you'll be selling a lot of pistons then. Thank you for joining us.
Thank you very much.
You look at the implications of a stock price that high, and it's not hard to convince yourself that no matter what we do, how well we do it, we can do no better than missing those expectations, because what that stock price was implying was a set of expectations that was just unattainably too high. And that was the bubble, right? That was definitely the height of the bubble, and it was reflected in the rate with which things came back to earth.
All of us, including ourselves, I won't deny, we took advantage of that market cap in the sense that it allowed us to raise a lot of capital that got us to a point where we needed, it would have been hard if the IPO window was closed, or we would have had to bootstrap our way. But the operational metrics, it's hard to look at a chart of our operational metrics from forget the IPO, go back to 1997 to present and say, that's not successful. That is tremendously successful, and you got to feel great about that.